مساء الخير. First, I would like to thank you all for being here and participating in our panel. At Kamco Invest, we've been tracking the ecosystem since 2017. There was great ideas backed by great founders and great early stage investors as well. But as you know, the main challenge was having enough capital to invest at growth and late stage to help the companies grow and scale. And of course, to help the companies grow and scale and having different of exit multiples opportunity. Today, the landscape have been changed, the story have been changed with the support of the government, the financial institutions, and the enhancing of the operations regulations that help companies to work, let's say, more efficiently. With that, all the development, we have the funding have raised more than 2.7 billion in 2023, comparing to 300 million in 2015. So Nora, we can start with you. Over the years, the Emirat was the main tech hub in terms of funding, in terms of talent, in terms of having a friendly infrastructure. But lately, we have seen the government, Hukuma Saudiya, the support of it has been overwhelming. So can you highlight that support in terms of funding, in terms of operations, and enhancing the ecosystem in general?
Of course. Thank you, Dalal. Assalamu alaikum. Happy to be here with the esteemed panelists. So the Saudi government journey actually started and began in alignment with Vision 2030 ambitious goals. And I would divide this journey into 4 phases. And I'll start with the first phase back in 2016. The first initiative and the theme of that phase was mainly updating the regulations and building the infrastructure. So there was a huge project, Ministry of Commerce, Capital Market Authority, as well as MISA, the Ministry of Investment. We work collectively to update the regulations. Regulation to ease the PEVC investments for the investors as well as the investees. So from the Ministry of Commerce perspective, we started by updating the company's law. From the CMA perspective, we've updated the investors and the fund management regulations. And finally, from MISA, it was streamlining foreign investment into the kingdom. Now, having said that, there was also the launch of the NUMO, the parallel market, in that same phase and that same theme. The second phase, or the second theme, was the launch of the PEVC Association. So you need to bring the private sector together, stakeholders, professionals, and so on and so forth, to advocate for the challenges, concerns, and opportunities in that space. And the PEVC Association, which we have Abu Omar here as a founding member of that association. So he's a private sector investor, but in the government, we always like to include them and include the private sector with us. So in the PEVC Association, they meet on a regular basis with several ministers to voice their concerns and their challenges. Now, the third phase, which was in 2018, there was the launch of government funds. And I'll highlight a bit on SVC. So SVC was launched as a government investment fund to catalyze and ignite investment into the private capital ecosystem. Now, private capital, we focused on VC, PE as well, and private debt, mainly venture debt. And as an evidence of that success, so until end of 2023, we've invested about 3.5 billion SAR, and that investment unlocked and unfolded about 5 multiples. So today, the total investable capital is about 17.5 billion. Now, the last theme was the launch of other government initiatives, including NTDP, the National Technology Development Program, which had 14 initiatives focusing on talent, on education, and on onboarding foreign startups. And finally, there was the launch of the premium residency visa. Now, collectively, all of these efforts brought Saudi Arabia to the forefront of the MENA region. Now, in 2023, Saudi Arabia came to the first place in the MENA region. In 2018, we were in the 4th place. In terms of funding, this is the second year where we grow over the $1 billion mark. So in 2023, total investable capital in the kingdom was about $1.4 billion. So this collective effort brought the investments from 60 million in 2018 to 1.4 billion in 2023, which is about 21 multiple.
MashaAllah. So Omar, being an earlier investor since 2015, you've been witness that development that happened over the year. How that affected your portfolio companies in terms of funding and operation and, let's say, the ecosystem in general?
Yeah, first, thank you so much for this very kind invitation. I always tagged Kuwait with entrepreneurship since actually one of the stories that inspired me to continue venture capital is Talabat, Mohammed Jaffar. So we started in 2015, and there wasn't really value in Saudi Arabia in terms of VC value, let's say it, or startup value. And what really gave us fuel to continue is the stories that Kareem, Talabat, and many others did in the ecosystem that actually created also momentum to continue. So Nora mentioned the stages in a very, very deliberate way. I can divide it into two things, into organic and inorganic. And I think what Nora is tackling now, and Nora, mashallah, and she's a veteran in the ecosystem, under the radar always, but very effective in what she's doing, mashallah alayha. So the organic is regulation. So everything in Saudi Arabia now is under development, or under revamp. Nothing you can say chronic as before. So one of the things that we were talking about that, oh, this is organic issue, which is the chronic issue, which is SAMA, Central Bank in Saudi Arabia. Always blocking innovation, always not cooperative with startups or the fintech. And in 2018, they established the sandbox. That was like a very surprising news to us, that they are now open to innovation. And since 2018, now more than 60 licensed fintechs and more than 300 in the pipeline to be licensed or to be in the sandbox. So this is like an incredible change in the mindset. Nothing chronic in Saudi Arabia. And I can say to some extent nothing chronic issue in the GCC in general, because most of the GCC you can feel it, you can see it, that everything is changing and everything is positive, and the government is now much closer to the private sector than before. So in general, I'm very happy that we started in 2015, right before the Vision 2030 has been announced. And since that time, we were super lucky to start that time, so that because we actually saw all of the changes happened in the market. I think maybe the inflection point that we noticed, Saudi market was actually growing much faster than before, was in 2020, when the pandemic came and when also the SVC and Jeddah and many other programs were actually now in action to deploy in a more, let's say, heavy way. So this is where I think we saw the change happened in a drastic way. And if you also see the number that Nora mentioned, so it's 1.4 billion. This also contains the two aspects that I mentioned, which is organic and non-organic. So there is like about maybe $300 or $400 million of funding came from companies who actually relocated to Saudi Arabia, versus the 1 billion that came from the homegrown startups in Saudi Arabia. So the change is very, very encouraging. And the details inside is also interesting, but we can mention about them later.
Inshallah. So, Mohammed, you scaled Talabat and Flowered from Kuwait to GCC in both phases, let's say. How can you compare the experience between both companies in terms as well of scalability and funding and operation?
First of all, I would like to say, I'm really happy to be sharing the panel with my big brother Abu Ali, Ukhti Nora, which both of them I look up to, صراحة. And the great work that they are doing in the ecosystem. I think when I first started my Talabat journey, it was 2010, and the ecosystem was extremely very different then. Alhamdulillah, my family were super generous with me in terms of them funding me in this very risky venture. Mm-hmm. Back then, it was extremely difficult, or virtually impossible, to get investment into this space. Alhamdulillah, I worked extremely hard. Alhamdulillah, I was able to execute on the ground, and the funding came from the family. Today, if you look, for example, what Abdulaziz Al-Lughani is doing with the Flowered, the whole ecosystem changed. The huge progress that has happened in Saudi Arabia has significantly helped companies like Flowered. In terms of purchasing power, but in terms of the funding as well. And it's, in the end, it's about going after real companies that solve real problems. This is what the main focus is. So we clearly identified both companies were real companies solving real problems, but we just needed that extra funding. But what's happening in Saudi today has significantly helped. And the continuous improvement of the Saudi ecosystem will, inshallah, continue to help companies like Flowered and others to reach, that kind of mega deal, size, yes, which we're already seeing in some assets there in Saudi.
Yeah, we believe the support and enhanced development that's happening in Saudi, it will not just affect Saudi, it will affect, we're an open market at the end, so it will affect GCC countries and the MENA region. So Mohammed, where do you see the opportunity then in Kuwait and the region, خاصة وبرنامج عمل الحكومة الأخير من أحد أهم ركائز دعم القطاع الخاص والمشاريع الصغيرة والمتوسطة?
First of all, what's happening in Saudi, yes, there will be some benefits to other markets. In the end, we do have a lot of benefits being in the GCC and being GCC citizens in terms of moving around in those 6 countries. But at the same time, countries are competing with each other. So if we need to also step up here in Kuwait for us to be able to attract the right talent and attract the right sort of investors into the Kuwaiti ecosystem. Otherwise, the gap will just continue to widen. I think we have to be patient here in Kuwait with the new management that is in place now. Inshallah, they will perform better. And I think we need to be super patient. I think we have a new leadership right now, and I believe, inshallah, they will perform better than the previous leaderships. But I think it's about being patient, but helping political stability. But Kuwait فيها مقومات جيدة. And in the end, there's a good cohorts out of Kuwait. Purchasing power is good out of Kuwait. And I think, inshallah, I'm optimistic that, inshallah, things will get better. However, they will not be better. They will not get better, in a day. We need to be super patient. We need to learn from our brothers and sisters in Saudi. We need to learn from our brothers and sisters in Emirates, Qatar, and all our other, other countries around us. And in the end, the basic countries are competing with each other. So we need to step up here, and I think, inshallah, this will happen. It has to happen. Sure. And I believe, inshallah, it should happen sooner rather than later.
Inshallah. So, Nora, being an investor in several funds, you're exposed to hundreds of companies. Do you think the companies are fairly priced, or let's say, how we can verify that the valuations are right, especially that the market is still developing and we don't have much comparables across different stages and sectors?
Thank you, Dalal. So let me take a step back and explain what does SVC do. So basically, we invest 90% of our investment is into funds. So we invest in funds, and another 10% is we co-invest alongside institutional investors. So we are a passive investor, and I would like to highlight how a developmental fund would invest. So the first and the foremost important principle that we follow is we balance the economic impact and the financial success. So even if we want to create jobs, help startups, or enhance our GDP, it has to be commercially driven in order for it to be sustainable. The second thing, we actually prioritize our national mandate and local investments. So we've invested in, I would say, 40% local fund managers. The remaining 60% is divided between international and regional fund managers. We invested in funds here in Kuwait as well. But for every fund that we invest in, we ask them to pay an equal amount of our investment into Saudi-based companies. So we encourage investment into the Saudi-based startups. And we act as a market maker. So if there is a gap in the private capital ecosystem in general, we have to act as a market maker. And I'll explain what do I mean by that. So back in 2019, when we started investing alongside Jeddah Fund of Fund, everyone believed there was abundance of capital and very few startups that everyone is chasing. And in order to organically try to correct for that, so we invested in accelerator funds. We actually anchored accelerator funds and venture studios. And the reason for that is to fuel the economy with more startups, investable quality deals for the likes of Faith Capital or Raed to choose and pick from, rather than chasing very few deals. Now, the fourth principle that we follow is that we invest in emerging fund managers. So we do invest in a first-time fund manager, but they have to have experience or at least success stories prior to that, even on an individual, personal level. And finally, we reached a point where we want to attract international investors. So we want to attract more talents, thought leaders into the kingdom and the MENA region in general. Now back to your question in terms of valuation. So as a passive investor, we can't interfere into the valuation. So the likes of the investors that we have here in the panel, they will determine the valuation. And even if we co-invest, it's institutional investor. But also let me comment on that. I truly believe these money that are chasing those startups are commercially driven. Those are high net worth individual, family offices, and international FDIs. They're all commercially driven. So they set the valuation, and most of these companies are oversubscribed. So this does justify some of these valuation. It reached a peak in 2020, 2021, and again, it was because there was very few deals that are investable and quality deals. But today, when we see the number of startups and the number of investment happening, you know there is a lot more of companies. Now, with macro conditions globally, I believe there was an organic, somewhat an organic correction happened in the MENA region in general. So startups at early stage, you see them focusing on profitability, thinking about the pathway or trajectory to profitability. So this helped in correcting that valuation peak.
Just to add to this point, because it's today, actually morning, I had this discussion with one of my friends here about whether the valuations are actually high in the region due to the availability of cash and the ability of incentives from stimulus incentives from governments. The reality is showing that actually we are following exactly the multiples that global growth deals are actually closing at. And the last, for example, round of Tabi is closed at 1.5 billion valuation. It's actually less than the comparables and global comparables in the same domain, while actually they are growing faster and they are actually also profitable. So it's not actually at all. It's very, very rational numbers, given the opportunity size that they are tapping, given the institutional investors. So Wellington was actually the pricing lead investor for Tabi, for example. If we compare now, we have by the way, this is also a pre-IPO round. And there is another pre-IPO led by TPG, first deal in the region. From TPG is also one of our portfolio companies called Hella. The price is actually less than the global comparables, even in Africa. So not at all. It's actually very rational prices. And the interesting part is that once those companies will go to the IPO, it will go to listing, the market, until now, the market is very rewarding to those who are fast growing and also generating increasing bottom line. So I see that this is maybe the best time for any pre-IPO investor or growth investor to look at the opportunities given the scarcity of money at that stage.
But Abu Ali, don't you think that we have to have some discount when we compare the global or international prices to the one in the MENA, taking into consideration the market fragmentation and the market size?
So there is always trade-off, of course. So what we are seeing now, for example, in the likes of Affirm or Klarna or whoever, those buy now pay laters are losing a lot. And the path to profitability is still unseen. They can't really also project when they can really break even. Versus, for example, the likes of Tabi. Now they are very profitable and generating, I can't disclose numbers, but inshallah soon you will see it in the IPO documents. The point is that those are very profitable players. So why we are not rewarding this profitability metrics and also maybe let's say correct it with the size with the TAM that those companies are tabbing. There is another also caveat that we need to put in mind. Models are not followed the same. So for example, Tabi just acquired a company in the banking sector. So they are not really following the same route that the likes of Affirm and Klarna and the global players are actually doing. They are increasing their TAM through the value chain, so tapping the value chain of their domain. So this is where I think we can also bet on the great founders and great companies to actually find their ways to increase and make their TAM bigger. TAM means total addressable market. Expansion for SaaS companies like Sella, like Foodix, we have also SaaS companies that are selling software. This wasn't really an issue to expand beyond the region. What we can put here is that maybe the fintechs, because of the complexity of regulations and fragmentation of regulations, is actually what we can have more discussion about. But SaaS companies, I don't see that there is any restrictions to scale anywhere in the world. And this is what's actually happening now.
Okay, Abu Ali, one of the obstacles in the ecosystem, and now we don't have for the venture capital investors, you don't have the full cycle of investments where you invest and then you exit. But mashallah, you had some in your portfolio. Can you give us some examples from your portfolio and the return achieved to your investors?
Of course. We started in 2015. So we are about to close our first cycle, alhamdulillah. And hopefully that we will close smaller fund, but hopefully that we will close at 7x DPI, inshallah, by 2026. So this is like the first cycle, and this is where I think the most discussions that we are facing now from investors who want to join is: do you have proven track record of this asset class in the region? Because we are hearing that US, Europe, and China, India VCs are creating great DPIs. What about the region? So this is maybe one of the things that we are actually having as proof of feasibility of our asset class in the region. So the question is about the feasibility and the cycles. Yes.
Your exits, examples from your
So exits now, for example, we have 5 exits in Fund 1. Most of them are secondaries. One of them is actually by acquisition. So Aventus has been acquired by a company called Bivy in US. All others are secondaries sale. Secondaries market is actually big in Saudi now and the region. The scarcity of these assets create demand to how to get to these exclusive deals. So this is very interesting also positioned for us in these very great companies that I'm talking about. So yeah, this is actually what's happening. Now we have about 4 companies who are preparing for IPO. We are expecting the IPO to start from 2024, end of 2024 until 2026. So Sella, Hala, Tabi, Uniphonic, and Foodix are actually preparing for the files, and they are actually also signing the contracts with the financial advisors to prepare listing. Maybe Tabi is the closest, but followed by the next, which is Sella, are the companies that we will see in the near future, inshallah, in these years. So and also there is negotiations, and this is where I think we are missing in the market, that we don't have technology companies who are listed. Mm-hmm. Because in US, mainly the main driver of acquisitions in the US market is actually from the big techs who are listed, and then this ripple effect of acquisitions are actually generated in a more organic way, because the best acquirer of a technology company is actually a technology company. So we don't have this in the region, and this is where I think we are very keen to see more and more technology companies who are listed, because we expect that this will be followed by a wave of acquisitions.
Sorry. But it's increasing, and local acquisitions have been increased comparing to the earlier years from the international ones. So, Mohammed, do you think this will be sustainable, especially in the exit have decreased in 2023 to 44 exit compared to 71 in 2022?
I would like to start by, I completely agree with what Abu Ali said. And one thing as well, we need to be super patient. And alhamdulillah, we started in 2017. Our fund is a family fund, so it's an evergreen fund. And alhamdulillah, we've also had, in Fadl Allah subhanahu wa ta'ala, 5 exits so far. And we expect as well, a number of our portfolio companies to also, inshallah, IPO either in Riyadh, Dubai, or Abu Dhabi within the next, hopefully, 12, 18 months, inshallah.
Can you mention the name or?
Sorry?
Can you mention the name?
One of them is Foodix. We also co-invested, thanks to Abu Ali, دخلنا بالشركة هاي a few years ago. Others, like Live Global, hopefully working with that in Abu Dhabi market. The thing is about being patient, right? And the market dynamics in this part of the world is not the same as the market dynamics in the West. But the more Saudi improves, and then UAE has to compete with this improvement, so they improve as well. Inshallah, دورنا هنا بعد in improvements. We will see big tech companies out of this region that will then go and acquire other smaller assets. Inshallah, we will see that. But we need to be patient. We're not as old as the rest of the world when it comes to technology. And I think with patience, with Saudi continuing to improve with the other markets as well, we will see better deals, bigger deals, and bigger acquisitions. And we're also seeing foreign companies also acquire assets here. One of our assets was acquired by Mozilla Firefox. So again, so there are few opportunities, but we just need to be patient, help the founders build these great companies, which is not easy. The most difficult thing is to build a company that is that makes sense and that is sustainable and continues to grow. أعتقد هذا أصعب شيء. If we're able to help that, we're going to be seeing better deals moving forward, inshallah.
Inshallah. So Nora, on the IPO point, we know that the main challenge on the exit opportunities in the MENA region ecosystem is getting companies listed. So how do you see the outlook of the IPO market, and do you think that the government have plans to support it?
Yeah, great point. So basically, let me take a step back. Exits in general for tech companies is one of two main paths, either M&A or IPO. In the US market, M&A represent about 80%. So the IPO is only about 20% of exits in general. But to the esteemed panelist points, even M&A, we lag behind in M&A as well. So we're going to address the elephant in the room. We lag behind when it comes to exits in this ecosystem. But we're witnessing, as Abu Ali mentioned, several pre-IPO rounds. And this indicates their IPO readiness, and it will happen in the coming 2 years. So there was the only IPO VC-backed tech company in the kingdom, which was Jahaz. But it created the path for other companies to IPO as well. Now, as Abu Ali mentioned, there is Tabi, Hala, Foodix, Uniphonic, Tamara, a lot of pre-IPO rounds that were announced, and they're getting ready for IPO. And you see a lot of bank capitals leading some of these rounds or getting into this round because they're experts in IPO readiness and in taking companies to IPO. Now, from the M&A perspective, you just mentioned the numbers really increased. So we hope that M&A will increase as well to represent about 80% of exit path. So it's not going to be just IPO.
Is it local M&As you mean, or?
So be it local or international, be it PE firms acquiring or be it corporates acquiring, to Abu Ali's point, tech companies acquiring, larger companies acquiring, smaller companies, so it varies.
Yes. I think, and we think with the increase or having more maturing companies now because they need to scale and grow, so we will see more local acquisitions, acquiring small tech companies. So, Nora, I think you mentioned, but we need to highlight it more, as VC criteria to invest in other regional VC funds, just to inspire the venture capitalist in the region.
Yeah, sure. So basically, we look at the team and track record. That's the most important element. So when it comes to team, it has to be at least 2 partners. We want to avoid concentration of key person risk. So there has to be at least 2 partners, the more the merrier. And they've worked together before, they have synergy, or at least they complement each other. Their track record is very important. So at least they had a fund before, or they invested, as I mentioned, personally, individually, but with success stories in place. So one would be the team and track record. The second one would be the investment thesis. So when we look at the investment thesis, it has to be aligned with our objectives in terms of sectors, stages, and also geography. The third one would be their operating model. So what I mean by that is governance in place, decision-making, systems, reporting, back office, and so on and so forth. And the fourth one would be the ability to source funding or the source of capital. So in SVC, we require that at least 35% of the fund is from private sector investors. And the reason for that, for the fund to be commercially driven, we require the fund manager to at least invest 2%. So the GP commitment cannot be less than 2%. And we assess their ability to source funding. So if they don't have a list of soft commitment from other investors, if they don't know which doors to knock to source funding, then this will let us challenge them. Now, the final and the last one would be the commercial terms. So we want to follow best practice and commercial terms. So it's the typical 220. We don't want them to go above or beyond that 220, 2% management fees and 20% carry.
And in terms of size, is it to have a small fund, 5 million, 10 million?
So the size, again, varies. We've invested in very small funds, and we've invested in very large funds, north of $1 billion. But depends on their thesis and the ability. So I'll give an example. When we invest in an international or local fund manager, we require that one equal amount of our money to be invested in the kingdom. So real for real. If I invested $10 million, I need them to invest $10 million in the kingdom. So if a fund manager comes and tell me I'll invest 50% in the kingdom and the size of the fund is $1 billion, so $500 million to be invested in the kingdom, I will challenge that. Because the fund size has to be in line with the thesis, geography, and their ability to source deals as well.
ممتاز.
Thanks to SVC that now there is a wave of international venture capitalists who are opening up their offices in Riyadh. So the latest 2 offices that already opened, I think General Atlantic and TPG are now opening their MENA funds in Riyadh. So this would never have been possible if there is no stimulus amount for them to come and to explore with lower risk for them. So thank you, SVC, for this effort.
And they're investing at, I think, growth to late stage, right?
So now there is like mixed bag of all, but those are the 2 notable names that I mentioned. I think there are many other early stage VCs like Kona, like many others.
If I may comment on international investors in general or international fund managers, so there is a push and a pull effect. At the very beginning, we actually invested our money in order for them to invest in the kingdom. There was this hard commitment to invest that one equal or 1x of our amount in the kingdom. So the likes of MSA Capital from China, 500, Partners for Growth in the venture debt, and the list goes on. Those invested because of the hard commitment, but they did see the opportunity in the kingdom. Now, to Abu Ali's point, there is the General Atlantic, TPG, and other Sequoia, and other international big names, top-tier funds, coming to invest in the kingdom without that hard commitment, without that requirement. So they see the opportunity and they believe in the ecosystem.
So, Mohammed, as an early investor, what sectors and business models attract your attention?
To be honest, we've made 27 investments since 2017. Out of the 27, they're quite varied. So we've done ed tech, we've done food tech, we've done deep tech, we've done different kinds of technologies. We've done, clean tech. So I personally love real founders that are solving real problems. Now, the issue with this is that it takes time for these founders to build successful organizations. It's not easy. So we look for founders who have that big vision, who are able to execute a company at a MENA level at least. We look at the addressable market. How big is it? We look at the M&A side of the market. So naturally, in the beginning, we were like investing in without having a clear thesis. But naturally, as we matured, our thesis became more focused. And in the end, we're taking a risk because so many things could go wrong that could end up, preventing this really great opportunity from becoming something.
Exactly.
And one thing I've learned in life is that 1 + 1 does not equal 2. So I think I like to be super patient. I like personally to take deep dives with founders. I don't take deep dives with everybody. Some of the founders we've invested in don't need my assistance whatsoever, and some of them no. They need it more often. The way we work, and we have a number of team members that are fully deployed in some in some portfolio companies based on the request of the founder himself. But in the end, we like things that we understand, and we also like to take risks and investing in different technologies that we have not touched before. We also like to see who else is looking at that company. For us, this is important. For example, if I see Abu Ali is interested in a company, I know Abu Ali has done his homework. I'll have more comfort when looking at that company. We try to avoid opportunities that nobody has touched. But in the end, I believe the next period, we will be seeing better things. Inshallah, as inflation gets controlled and it starts to go down worldwide, we're going to see, inshallah, a surge in activity and a surge in interesting things happening out of the region. Again, what's happening in Saudi and all the work that you guys are doing has really set the momentum and created better founders, better ecosystems, better environments, which we are, alhamdulillah, benefiting from.
Inshallah. Omar, your thought on that?
So more or less, I think I will follow Mohammed's path. So we started investing in marketplaces and in general services companies. Gradually, we invested in software. So software is actually something that we discovered with time. We thought that maybe the addressable market for software in the region is so small. So one example, Sella, we invested in Sella with hope that the Sella can acquire 10,000 merchants in Saudi Arabia. Now they have 120,000 merchants only in Saudi Arabia and still growing single digit month on month. So the market is deeper than what we thought. The services that Sella, for example, could actually stack over the subscription was actually more than subscription revenue by itself. So now subscription revenue is only 40% or 45% of the seller revenue. All other revenues are coming from the marketplace that seller is providing to the merchants. Interesting things, interesting models, evolution in the region that actually we keep learning every time we go to the market. Lately, we invested in deep tech. So we invested in 2 deep techs. So a company called Muzun, if you heard about it, it's actually a great company now. They built in 2019, since 2018, they are building maybe I can claim that this is the most powerful Arabic NLP, NLU engine in the region. And with the emergence of AI in the whole globe, with the LLMs, the large language models everywhere, now this engine came as a standout in the whole Saudi. Now, most of the government entities, most of the sovereign-backed entities will require to always have a very secure, very safe way of understanding their database without really exposing themselves to the likes of OpenAI or ChatGPT or whoever. So these type of companies are now in a big need for the region. And those guys, we were lucky to be one of the first backers to them. So this type of evolution is happening. And this is where I think the bet is that this evolution, if we just couple it with also stimulation and incentives from the government, that we can actually accelerate our our position in the whole globe, not only in the region. This is our ambition.
Inshallah. So Nora, we come to our last question. The main, again, let's say one of the challenges that we have is the lack of talent and technical, let's say, coders. So is there any new initiative to mitigate that challenge?
Yeah, basically, the narrative for talent shortage, specifically for technology and innovation, is a bit complex and complicated. We're going to address it. There is a shortage when it comes to tech talent, and I believe the grassroots is to solve for educational and universities, and there is a lot of things and work to be done. But to be very honest, we have to admit that we're witnessing the emergence of thought leaders, of innovative founders, of serial entrepreneurs. And I believe collectively we can name a few. Like we have Hussam Arab from Tabi. He's a serial entrepreneur. This is not his first company. He's exited a company before. We have Abdelmajid Al-Saykhan, another company in the buy now, pay later, Tamara. This is his third venture. We have Abdelaziz Al-Loghani. We have Hisham Al-Falh. A lot of impressive entrepreneurs and thought leaders. Now, when it comes to tech talents, I believe the National Technology Development Program in the Kingdom, and I'll let Abu Ali maybe elaborate a bit on that program, is addressing some of those talent and shortage. There is the launch of several academies by the Ministry of Communication and Technology in the Kingdom. And I would also believe what would solve for that is, again, the launch of the premium residency visa. So now the country is open for tech talents, for professionals, and innovative leaders to join us in this ecosystem.
Just I want to add one thing that so we receive about 2,000 companies every year to screen, and I always give more attention to any company that comes from Kuwait, because actually I'm always anticipating the next big also company should come also from Kuwait. So mashallah, just hopefully that inshallah you will one day also come back to the ecosystem.
Thank you.
You were quiet a bit last 2 years, but inshallah.
There's a lot of innovators in Kuwait with talent, inshallah. It's not
a lot of them moved to Saudi.
Seems so.
So thank you very much. Thank you for this insightful discussion. We enjoyed it so much. Thank you very much.
Yeah, thank you.